Trump's crypto policy could trigger economic crisis. Genius Act risks explained. A banking specialist warns that Trump's new cryptocurrency policy might endanger the entire economy. Could it be that both Republicans and Democrats have united to steer our economy towards a potential crisis? This is the concern raised by Mark Kopelovich, a political science and public affairs professor at the University of Wisconsin-Madison, who has authored several books on banking. In a thought-provoking essay published in Barron's, Kopelovich expresses his apprehensions regarding the Genius Act, a recent law signed by President Trump after it was passed by the House with a notable semi-bipartisan vote of 308 to 122. This act is one of 3 cryptocurrency-related bills that were approved during what the Republican leadership dubbed Crypto Week. It establishes a regulatory framework specifically for stablecoins, a category of crypto assets whose values are linked to more traditional financial assets. Kopelovich articulates his worries, stating, "I am concerned that this legislation and the widespread adoption of stablecoins that it will promote may instigate a crisis at the very core of the banking system." He is not just any commentator. He's the author of the International Monetary Fund in the Global Economy, Banks, Bonds, and Bailouts, and has co-authored Banks on the Bank, Global Capital, Securities Markets, and the Political Roots of Financial Crises. He elaborates, "Since a stablecoin could fluctuate in its exchange rate against the dollar, an asset that is supposed to be worth $1 might not consistently hold that value. This scenario could lead to issues reminiscent of the 19th century American period of wildcat banking and financial panics. Moreover, Kopelovich is apprehensive that the formal acceptance of stablecoins in the U.S. will attract a surge of foreign investment, as international investors seek safe assets that are indirectly supported by the U.S. government. He argues that this influx is exactly the kind of fuel that increases the likelihood of banking crises." Additionally, the professor warns that the rise of stablecoins could heighten financial institutions' exposure to riskier cryptocurrencies, while simultaneously encouraging banks to adopt more hazardous commercial lending practices to attract customers who might otherwise prefer stablecoins over traditional bank deposits. In his Barron's article, Kopelovich recalls, "In 2020, I co-authored a book with MIT professor David Singer discussing why certain countries are more susceptible to systemic banking crises than others. Our findings underscore the impact of 2 combined factors: foreign capital inflows and the structure of financial markets. We discovered that foreign capital tends to incite risky behavior among banks, and banks are more inclined to take excessive risks when they operate within a financial system characterized by large securities markets." He draws parallels to the current situation with stablecoins, stating, "I see similarities here. Unlike other cryptocurrencies like Bitcoin and Ethereum, which can experience wild fluctuations in value, stablecoins are designed to be a more stable store of value. They are linked, either through algorithms or asset reserves, to non-crypto assets, such as U.S. Treasuries or the dollar. However, this does not guarantee that they are immune to crashes. Currently, the most widely used stablecoins are Tether and USDC. The Genius Act represents the first significant regulation of stablecoins in the United States and signifies a victory for the revitalized cryptocurrency sector, which has emerged from a lengthy period of stagnation. Remember the FTX debacle? Largely due to its connections with the Trump administration. This law will dictate who is permitted to issue stablecoins, mandating that they back their cryptocurrency on a one-to-one basis with a liquid external asset and provide monthly disclosures about those reserves. The Senate has already approved the legislation with a vote of 68 to 30. In a statement following the bill's enactment, the White House declared, "The Genius Act prioritizes consumer protection, enhances the status of the U.S. dollar as a reserve currency, and strengthens our national security." President Trump is delivering on his campaign promise to establish America as the global leader in cryptocurrency. The other 2 bills passed during Crypto Week aim to create a regulatory framework for non-stablecoin cryptocurrencies, the Clarity Act, and prohibit the Federal Reserve from issuing its own digital currencies, the Anti-CBDC Surveillance State Act. Both pieces of legislation are now set to be reviewed by the Senate for approval.